Welcome to Momentum Monday. Today is January 8th, 2023. Howard, are you seeing much better with those huge glasses?
Here's the thing, Ivan, because you're like 11 years old. Once you put these Osco glasses on, there's no turning back. Once you go two times, pretty much it's going to look like Mr. Magoo here.
Is the world looking more bullish or more bearish?
No, I tell you what, it's really good not to wear glasses because I can't see any of them. I listen to the news. I mean, I can listen to the market. It's really 57's been. I'm starting to tip, starting to like roll. I look like the S&P chart right now. I would say here I was in my 40s right here, and back in December 21, in my mid 30s. And then this was the kids just weighing on me, the 200-day moving average is Max and Rachel. And now I'm so old, I'm trying to regroup here, in 2023, but I'm old. So who knows what will happen? That's my take of the market. Now, what do you see?
Yeah, I mean, the S&P is kind of still in a range. We still haven't made a lower low, but we haven't made a lower high, higher high either. So it's kind of stuck in a range. The year started with incredible strength in China and in gold.
Yeah, we talked about that. We talked about it over the last month or two. It was relatively.
Yeah, I mean, the Chinese tech ETF KWEB is up 100% since its low in October.
Yeah.
And quite a few
buying it like for a trade in this around this price, back in like end of last year, and then
but you bought on weakness though, and right now we have strength. It's above the
200-day. So
above the 50.
I think US dollar's kind of been weak, so that's helped.
Yeah, absolutely. The US dollar has been pulling back. A big factor that is also helping gold and gold miners, which definitely stood out at the beginning of the year. Notable relative strength. But when I went to a bunch of charts this weekend, I definitely noticed China as a theme, quite a few Chinese stocks. I mean, obviously, you still have political risks and other risks that can lead to a gap down in those stocks. But just in terms of price action, they've been accumulated and they've been showing the most strength in general, and have the potential to show even further strength. For example, Alibaba, if they allow them to.
Yeah, that's a big downtrend. Jack Ma's kind of out.
Yeah, but if they allow them that IPO for their payments daughter company, could be big. Yeah.
I think they've agreed to get SEC audits. Most of these companies, again, it's China. Do emerging markets. You've got to play the dollar. You got to play, wow, what's that one? Data Nexus.
Yeah, I mean, it's just a bunch of Chinese companies. As I said, the first week definitely notable accumulation, but that's not the start. I mean, that trend has been existing for at least a couple months. Other than that, I think tech in general, and especially software, continues to look very weak.
Yeah.
And on the brink of another leg down, but
no bounce. Yeah,
we will see. I mean, if you just go through a bunch of software charts, they're not looking pretty. I mean, they're looking close to. If this chart was inverted, people would be buying this as a breakout.
Definitely, I own some. It's still a $13 billion company.
Definitely a lot of weakness in the sector as a general. Microsoft broke down on Monday. Look at how weak it looks, and the S&P, I think it was up like 1% or something for the week, and look at Microsoft. So definitely,
I'm going to share 3 charts and then we'll come back to this. So let me share.
Okay, let me stop sharing then, and then you can share.
I'll link to it in tomorrow's show, but I think JC All-Star Charts had a really great. Can you see my screen yet?
Not yet.
Okay, so JC, I'll share it and then we get a great podcast. Went through about 100 charts with oh shit, I'm sorry, buddy. Where's fucking Zoom? Share screen. All right, can you see it now?
Yes, we can.
All right, so Jay, I'll link to it, but so I don't want to repeat everything you can lead. It was a really great podcast with Badnick and Josh Brown and JC. They went through 100 charts. You would have fun on that show. But JC's been saying this for a while, and he's been right that this is we kind of just, the money hasn't come out of the market so much as it's rotated, and so FANG was carrying the market last year, and really 7-8 years it was all about FANG, and now that's kind of a headwind on the market, and now these equal weighted indexes really bottomed in April, May, June of this year, and you can see all these equal weighted tickers. Do you follow any of them, Ivan?
Some of them, yeah.
Yeah. So I really think that's an interesting, I'm going to look at a few of these for my own portfolio because I'm sitting on so much cash, but I think, I can't pick a value stock, and in the end, value is what's growing right now from staples. So it's not, the market's pretty deceiving right now, as the headlines are super negative, and the price action in stocks that were working for 10 years is broken. So everybody's like, woe is me, and all the headlines in tech are layoffs, fraud, venture capital can't raise money. But there's, for all the negative headlines, a lot of these equal weighted indexes that no one owns, which are just, most Americans own market cap weighted index. So a lot of these tickers people should start getting familiar with, because this could be a 3-4 year trend. So equal weighted is the first thing I wanted to see. I thought this was an interesting chart just because, for about 1.5 years, 2 years since COVID, Tesla was beating market cap of Exxon. And now you see Exxon as it creeps up to all-time highs, probably all-time highs with dividends. Tesla has crashed below Exxon's market cap, and the world seems to be making sense again. It's taken a long time for the world to stop making sense, but this is a pretty interesting chart. Next, let me just want to bring, this is, I think, the second most important chart. Is, you probably know this more than me, you've got the all world index, kind of like bonds last year. The all world index might be breaking a long-term downtrend against the US indexes. So you have two big trends going on. We don't know where interest rates are going to flesh out this year. If rates stay elevated, financials and energy should continue to do well, which is not my world. But it's not horrible for the economy as much as we hate the banks. They're healthy relative. And the global stock market, and this could be dollar reasons, it could be the fact that most of these other than China, most of these other indexes aren't heavy tech. They're very much financial and industrial. May be reversing a long trend. So I thought that was important. Let me just see a couple others. I think that's all I had. Let me stop sharing the screen. And then I thought the other thing that stood out was gold, which is an interest to me that you brought up. It's just getting a bid, and the other thing getting a bid are defense, aerospace, ITA. I think it is like ITA.
Like defensive or defensive?
Defense sector. ITA, I think is the ticker. Yeah, aerospace. You can see, I don't know, go back to a monthly. So I guess the thesis here is, the price action is good. The thesis here may be Germany, Japan, everybody's arming up, and Ukraine's going to have to rebuild, and no one can trust NATO, so everybody's got to spend money arming up. So
yeah,
these are stocks that we've been talking about for a while.
Yeah, it's not a new thesis. It's been ongoing, probably for the
couple years ongoing. But it can go on for a while, like if Germany and Japan and have to really, they haven't been building arms, arming up for a long time. So in this world where everybody's kind of realigning around China, Russia, it's an interesting trend.
Yeah, absolutely. Yeah.
It's not my favorite thing to think about. So I'm for my own portfolio, I'm thinking more about equal weighted and select nibbling on tech if we see another 10-20%.
Okay, but equal weighted, that means that basically you want to bet more on smaller caps, not on the mega caps.
Yeah.
Because why would you invest an equal amount in, let's say, a super tiny company like FCX, for example, and then an Apple? Like, if you buy an equal weighted index, you're allocating the same amount to both.
Yeah. I'm just talking about price action on it and putting money to work. Like, I'm not spending enough time to
in general, market breadth has been improving. We're seeing more stocks above their 200-day moving average. So certainly, even if the indices make another low, we have enough foundation, for potential bullish divergence. But what is also true is that, I mean, anything can reverse in just one day. All it takes is one event, as we saw on Friday. Like, the market was looking pretty grim going into Friday when the non-farm payroll report came. It was above estimates, but wage growth is slowing down, and basically the market rallied based on that. We have a CPI report next week. So almost every single week there is like a news event, economic news event, or a Fed speaker that can derail the market or basically help a rally. So it's been very choppy, very range bound, sideways market. So you have to pick your spots. And earnings season starts pretty much this week.
What, next week? Yeah.
This week with the banks, and then tech is a couple weeks later. And as you can see, banks are, looking solid. JPM is near 52-week highs, or not 52-week highs, but maybe six-month high. So
but still, like,
there are definitely a lot of areas in the market that are looking constructively, including home builders. They started strong this year with, as you see, big breakout. This is a daily, this is a weekly. I mean, still in a downtrend. I wouldn't really chase them, but there was a slight pullback in interest rates. As you can see here, treasuries are rallying, which means interest rates kind of pulling back. Obviously still in a big downtrend, so we need to see it at least above, this level here to make a higher high.
There's not much going on. I mean, like I said, like, I'm watching, it's, there's all this negative news, but it's really just the tech and large cap mega.
There is a lot going on. It's just hard to have conviction for more than a few days or a week in any move. This is the problem, because the Fed can come out and they can derail anything. They mentioned very specifically in the minutes. We had Fed minutes on Wednesday that actually financial markets tend to try to forecast the future, and every time when they see the stock market going up, that's not a good sign for them, because that basically means that the likelihood of them pivoting decreases anytime the market actually rallies. So something to keep in mind is, I don't think it's going to be that easy this year as well. So
no, the active guys are doing well, and I'm not an good active investor.
You have to be very nimble. You have to be willing to change your opinion on a daily basis, basically.
Are you seeing the same with your swing stuff?
There are definitely more opportunities, but the first week I didn't make any money. I was also got chopped, So it's definitely not getting easier. We'll see. It's very early.
My best move the last 6 months is just ignore it and do treasuries. That won't last forever. If we look at UUP, which was $1, man, there were so many articles when it peaked, like, just, if you overlay all the back from September.
Right around here,
every Bloomberg, Barron's, they all had, dollar is a wrecking ball. Like they spent 2 months of subscription time talking about how with all their creative, dollar is going to the moon, and that was the top. So you see this sell-off that helps the emerging market stocks, but man, this macro is really tough, mainly because of interest rates and deglobalization. And then like even the European financials, I mean, that's been the best sector for the last 6 months.
What is the EUFN? I think so.
EFUN or something? I don't know.
Yeah, this is it.
I mean, yeah. So I don't know. The world doesn't seem to be coming to an end. Like even Deutsche Bank, which was a comedy for a decade or two, like, so what is that? Like one of the best performing sectors other than China. So basically you got European banks in China, bottoming, and tech rolling over. Read into that as you may, if that's like a beginning of a new trend. I don't know. And then I think the other interesting is like, gold people love talking about gold, much like Bitcoin people like talking about Bitcoin, and they got a lot to talk about. I mean, that's a good setup.
Yeah, I mean, this is a monthly chart, and it's
above 200. That's a hell of a setup, and there's a lot of money that would pile into gold. So, but that doesn't excite me. I mean, that was probably one of the best sectors last year outside of energy was gold, just because it didn't go down.
Yeah.
So there'll be money looking for defense. I continue to do it with short-term interest rates, just being in T-bills, and I'll let professionals like you that do this data. You got to do this for a living, grind it out. All right. Well, have a good week. I don't want to dig too deep into it. I'll share the JC post as well. Have a great week, buddy.
All right, you too, Howard.
I'll see everybody next week.